Greetings, distinguished guests. Welcome to 0618.io, your ultimate resource for mastering trading. Whether you're a beginner or seasoned trader, our platform provides valuable insights and strategies to improve your trading success. Kindly subscribe and activate notifications to stay informed. In this video, I'll be showing you how to use the Stochastic Indicator and discuss some stochastic trading strategies. If you're interested in trading content, feel free to subscribe to my channel. Let's begin by defining the Stochastic Indicator. The Stochastic Indicator is a momentum indicator that provides overbought and oversold signals. It can also be used to predict trend reversals. There are four key components of the Stochastic Indicator: the upper band, the lower band, the %K line, and the %D line. How to use the Stochastic Indicator. To use the Stochastic Indicator, start by going to the Indicators section and searching for Stochastic. Select it from the list. The Stochastic Indicator gives values between 0 and 100. A value above 80 indicates the overbought area, which is a sell signal for traders. Conversely, a value below 20 indicates the oversold area, which is a buy signal for traders. However, traders should not open positions solely based on these signals. In a strong uptrend, the Stochastic Indicator can remain above the 80 line for an extended period. Similarly, in a strong downtrend, it can stay below the 20 line for longer. Therefore, traders need to look for additional confirmations before making a decision. How to predict trend reversals. Now, let's explore how to identify trend reversals. The %K line and %D line are crucial for understanding trend changes. If the %K line crosses above the %D line, it signals a change from a downward trend to an upward trend, which is considered a bullish signal. On the other hand, if the %K line crosses below the %D line, it indicates a change from an upward trend to a downward trend, which is considered a bearish signal. It's important to note that traders shouldn't rely solely on the Stochastic Indicator. They should use it in conjunction with price action strategies or other indicators for higher accuracy. Stochastic Trading Strategies. Now, I'll show you 4 different stochastic trading strategies. Strategy 1. Overbought area and resistance level. Let's look at a chart. We can see that when the price hits a certain level, it starts to decrease, indicating a resistance level. Now let's check the Stochastic Indicator. If the indicator is in the overbought area, it could be a short signal for traders. However, additional confirmations are needed. 1. The %K line must cross below the %D line. 2. The stochastic lines should be below the 80 line. After these bearish confirmations, traders can consider opening a short position. Remember, using a stop loss is crucial because no trading strategy or indicator is foolproof. Strategy 2. Stochastic and EMA, exponential moving average. For this strategy, I'll be using the 4-hour chart with the 50 and 200 EMA. A key point to note is that when the price is above the 200 EMA, it is considered a bullish signal confirming an upward trend. Looking at the chart, we see an upward trend. When the Stochastic Indicator is in the oversold area, it may indicate a long signal. But again, traders need confirmations. 1. The %K line must cross above the %D line. 2. The stochastic lines should be above the 20 line. 3. The price must be above the 50 EMA. After these bullish confirmations, traders can consider opening a long position. Strategy 3. Short signal with EMA. This time, we'll use the 1-hour chart with the 20 and 50 EMA. When the price is below the 50 EMA, we can confirm a downward trend. Checking the Stochastic Indicator, if it's in the overbought area, this is a short signal, but we need more confirmations. 1. The %K line must cross below the %D line. 2. The stochastic lines should be below the 80 line. 3. The price should be below the 20 EMA. After these bearish confirmations, traders can consider a short position. Strategy 4. Trendline and stochastic. In this final strategy, we see an upward trend on the chart. When the price hits a certain level and starts to increase, we can draw a trend line. Now let's look at the stochastic indicator. If it's in the oversold area, it could be a long signal, but let's check additional confirmations. 1. The %K line must cross above the %D line. 2. The stochastic lines should be above the 20 line. After these bullish confirmations, traders can consider opening a long position. In this video, I covered the stochastic indicator and various stochastic trading strategies. Motivation is key for all of us, and I strive to create valuable content for you. If you found this video helpful, please show your support by liking the video and subscribing to my channel. You can also check out my other videos. Thank you for watching, and I'll see you in the next video.